So this year has been too interesting. The argument is wasn't it fun when stocks just went up? What's the stuff that they go down? Why are stocks going down? It's been a while since the stock market went down 13%. How you doing, Tomas?
Hey, Victor, sorry I'm late. I thought it was 1 hour later.
Oh, no problem, no problem. Very
No,
nice to hear your
no hay
voice.
problema.
So the market has had a really nice sell-off. We're coming up on a month since stocks started to sell off. We'll see how they do this week. But it really it kind of disrupted a lot of the stories that were making stocks go up, right? Like the AI story. Are investors really paying attention to that next company that says, "Oh, we're going to use AI to make people toast in the morning, for their breakfast," or AI robots, right? Now, in 10 years, do I imagine we'll have robots? Absolutely. Some use cases are phenomenal. But between now and let's say the end of 2026, which is what people are really thinking about, people are scared. And there's a lot of fear out there. And it's almost like when you have a bad market, the news outlets begin to get with the program and they go dig up every negative story. Okay, inflation, got lots of problems there. Unemployment, got lots of problems there. Tariffs, that's going to create a lot of problems. So all stories are spun in a negative sentiment. And I think that's going to be something that they say that a stock market will begin to rally once it gets over a wall of worrying. And we haven't even approached the wall yet. I think we got plenty of negativity out there. So as we look at this situation, I'm like, all right, so where would it be smart to invest? What would be smart for me to do with my portfolio? First, man, cash and short-term bonds and money market accounts, they're cool again. Really cool. Like the coolest people in Wall Street are, what's your cash position? It used to be, hey, did you buy NVIDIA? Did you get in on, the XYZ trade? But right now it's like, man, anybody who's in 25% cash or short-term bonds or, money market accounts, it's looking pretty darn smart. So that's one area, right? Nothing wrong with having some cash. Nothing wrong with slowing things down. The second thing is, let's just see who's leading the race this year. And materials keeps coming up. This just keeps working. And I'm going to follow a thread on that and show you 3 materials companies. One of them I did a video on, which is Ternium. And then there's going to be 2 others. And just following the thread and seeing what's going on there. Is that a good space for me to enter? I don't have any material stocks yet. I already put in a buy order for Ternium. I might put in a buy order for BHP and FCX, but I literally finished doing analysis 3 minutes before I joined the call. So I haven't even had a chance to say, well, do I really want to do that? So I'm going to look into that. I've got plenty of stocks in healthcare and I continue to add to healthcare. I'm not going to buy a utility. I hate utilities. I don't want utilities. Somebody else can make money with utilities. And energy, I already have energy. So this is where, the returns are doing quite well. The places the money's coming out of is technology, and I don't think the money's going to rush back in. I don't think the money's going to rush back into discretionary. You think about discretionary, especially, you have an economy that's slowing down. People are being careful with their money. No more stimulus money, no more free money, no more 2021 where people are getting checks, free money, go spend it on stuff that is irresponsible. Go buy a $500 pair of sneakers, go buy, all kinds of luxury goods that, you feel like, oh, well, I'm going to buy it because I didn't earn the money. That could be it. But those days are over. So money's coming out of here and money's going over here and it's staying in cash. And bonds are doing well. So I'm going to be buying into my short-term bond ETF. My long-term bonds are fine, but I got to keep replenishing. I have a big bond that is redeemed this Wednesday. So I get $25,000 back, and I'll have that in my cash pile. Okay, so That's where the market's headed. So what am I trying to do to get a good return this year? So I'm looking at 3 companies, and the first one we're going to look at is Freeport McMoran. Why am I interested in this company, right? Is what I wanted to do was I wanted to look at, now I totally get copper, right? There's some commodities where I don't get them and I probably will never get them, like gold. Some people like to own gold. Totally get it. I have good friends that are super smart. They invest in gold. I've just never made it. I'm like, I don't get it, but I totally get copper. Copper is in so many electronics. It's in the data center. It's in our automobiles. It's everywhere. Copper is a necessity. So I thought, okay, what are the biggest copper producers in the world? Let me dig in there. Pardon the pun, dig mining. And so I started looking into companies that produce copper. So the first one up is not that one, is Freeport McMoran. And this one's in headquartered in the US, but they do business around the world. It was founded in 1987. Okay, perfect. I'm good with this company. It's headquartered in Phoenix. All right, but they have operations around the world. Okay. My cup of tea, I'm in the US, and that would be a comfortable investment. This is a $55 billion market cap company. Revenue, you're paying. The other thing I'm doing this year, paying more close attention to, is the ratio of what you're paying for revenue. This is 2 times revenue, roughly, price to sales. So that's good. That's really good. If you get a company that's like 20, market cap to sales, that's risky. For 2025, it's like, I don't want anything like that. I don't want anything that looks like that. They better be curing cancer if I'm buying 20 times sales for a company. Forward PE 23, it's a little bit high, but these guys, they might be in the right space. Over the year to date, up 2%. Over the 5-year, not too good, but look at the 5-year. Wow, a really nice run. I think they acquired a business, they merged with another business, and they've been on a pretty consistent operation so far. So they had good growth. They've had good growth in the past year. That looks good. If copper prices rise, these guys are going to make more money. So that's the benefit of these guys. So as I look at the valuation of this company, Freeport McMoran, I get roughly a 6% discount. The cash flows look good. I'm using, with these mining companies, what I do is I try to be conservative in every respect. And ever since they acquired another business, was roughly 4 years ago. So I want to look at those numbers and average out the free cash flow. And then from there, since I expect they're going to keep growing by 10%, is grow those by 10% over the next 4 years. It gives me an intrinsic value of $68.9 billion. They have cash on the balance sheet and they have some debt. So it brings it down to 63. So this is a decent investment in a space that's working. And I believe these guys also pay a dividend. So a small dividend. I don't really care about dividends, but it does pay a small dividend. When we look at earnings per share, it's not as good because they're being priced with a really high PE. And I'm going with 18. I don't want to pay too much for a company right now. So this is a decent investment. I might wait until this thing drops a little bit, because if it rises, it's going to, in my opinion, be priced well above its intrinsic value. So that's Freeport McMoran. The other stock, and we'll kind of hit it while I'm here, is BHP. And BHP is in Australia, and they are a company that I am familiar with. They are a big producer of copper, among other things, iron ore. They also produce ore that goes into steel, and they produce a lot of potash, all kinds of stuff. And they're located in the Asia region, which is, strategic because their number one market, no big surprise, China. China's GDP is expected to be good this year. It's expected to be good next year, especially compared against the US. These guys year to date, not setting any records. Over the past year, the stock sold off, but copper prices have been going up. So this one, I'm like thinking, oh, maybe this one's a stock that I can make some money on. This stock hasn't done much over the last 4 years, but it has these low points and then it rallies up. So this one's looking somewhat interesting. Now, I'm not a big technical analyst, not a big technical investor, but I would say I like this setup, if I could borrow their terms, because you see that it never really drops below this level for the last 4 years, but it does have its rallies. And if materials are rallying, this one might go places. PE is nice and low, although this data is mixed. This is the stock, that I was mentioning, Scott. They're using, this is the shares outstanding in Australia, but they're using a US stock price, which is wrong. The share count's actually lower if you consider that the share price in Australia is like $36 a share. So this data is wrong. The PEs are wrong. I used the correct data on my valuation model because I had to dig into it, look at their own financials. I mean, I spent like 45 minutes trying to get to the right data set. So this is it. This is much higher risk because it's out of my home country. It's probably a little too high of risk. So I'm going to lower that a little bit. I'm going to use over the last 7.5 years now in Australia as well as in Europe. They don't announce every quarter. They announce twice a year, semi-annual. And in this case here, they've already announced the first half. They have the fiscal year that ends at the end of June. So with the best data I've got, and what's good about these guys is they always produce free cash. These guys are like, they're not like when they make a hole like in an area, they're not digging out stuff. They're digging out cash, just consistent cash. When you look at their cash flow, it's just consistently operating cash. Look at those big chunky numbers. This is in US dollars. And then you subtract your CapEx, and just every year these guys have excellent free cash. So I took 7.5 years and I used the average. And I think that they'll probably do that over the next 3 years. And I'm going to grow it by 10%, and then terminal value grow it by 3%. So based on cash flow, these guys are really nicely discounted, and they do pay a nice dividend. I think their dividend was closer to 5%. So that's a nice dividend. I'll have to double check that. I haven't verified that number, by the way, but the other numbers I have. The earnings per share don't look as great. I guess the PE is a little low at 12. Freeport McMoran was at a higher PE, but I'm going to leave it there. Overall, this looks like an interesting investment. I like the setup of the stock. This one, I probably like BHP more than Freeport. It provides just greater upside if we look at that cash flow. So this one might be one that I also buy. And then the last one is Ternium, which I did a full video on. This one is setting up really nice. It's another materials company. There's no copper involved on this one. It's all steel. But these guys are set up really well. So I've already put a buy order on this one. So that's what I'm trying to do this year is I'm not taking like my portfolio and like doing like a total like remodel job here. I'm still keeping Meta, Google Alphabet. I'm going to buy some more Mercado Libre. I'm going to continue to buy these companies that I want to own for the next 5 years. But the capital that I have in that cash pile, it's going into healthcare. It's going to go in a small portion to now materials, and a good portion into bonds. And just wait until this market decides we're not going to go down anymore. I don't know if the stock market's going to go down another 10%, but I wouldn't be surprised. If it goes down another 10%, it'll be like, yeah, that makes sense because there's a lot of bad news. If it goes down another 20%, that would be a surprise. I think that'd be pretty painful. If it rallies from here, maybe goes sideways, that wouldn't be a surprise. Remember that 2022, the whole correction took like a year, right? And it was bloody on the NASDAQ, 34%. So it could take a while. But I think we're in it. Like here, like 2022 compared to 2025, this is where the Fed really raised interest rates like really fast, and they drove Silicon Valley Bank into bankruptcy. I mean, they were breaking things left and right. But maybe tariffs are going to have the same effect. And maybe we do get on this really bad losing streak because tariffs end up being really bad for the economy and really bad for companies. And companies are really apprehensive about doing business and investing in their businesses. So that's what I wanted to open with. That's where my head's at. And those are the stocks that I'm tracking. Those are new stocks that we haven't talked about before. So that's the first segment, is material stocks. Any questions on that before we move on to what you would like to talk about? Which stocks you want to cover?
Yeah, Victor. So I just had a comment actually, since you brought up the bonds. And so going back to that, something that is still a little bit of a mystery to me sometimes is how bonds are valued in the market. Like, for example, I have a mix of some bonds in both my IRA and my main portfolio. And so I have two different bonds that have two different stories. One is from Jefferies Financial, and that's a 6%, and they have a pretty decent credit rating. That would definitely be investment grade. And even though it's 6%, the value has gone down. So since I bought it a year ago, and so if I sold it, I'd be selling at a loss, like 3% loss. But on the other hand, I have some bonds from New Mountain Financial, and it's not quite high yield, but it's like they have one credit rating before. They're like right borderline high yield, and it's almost 7%. But even though that is almost a high yield bond, they have a lower credit rating, that value has gone up, which is so it's a little bit strange to me sometimes. But maybe that's not so important. Maybe bonds are not something you should care so much about the value of them over time. But I just noticed that. One other note, just to mention it, I saw that you have VCLT. Is that correct still? You have a Vanguard long-term ETF?
Yeah.
Yeah, so just a quick comment. I actually considered that for myself, and I chose TLT over that because they're basically they're considered kind of equivalent. But TLT, even though the expense ratio is higher, is a longer average duration. So in falling interest rates, the value in theory should go up more. Well, that was my logic at the time, but I was just looking at VCLT. Man, 0.03% expense ratio. That's nothing. Like, you're going to spend more money buying and selling bonds, like on the commissions as a retail investor. So,
I agree.
Anyway, that was my comment on that.
Yeah, and the way that the bonds get priced is as you have interest rates go up in value. I'm sorry, as you see interest rates rise, right? Let's look at the 5-year here. And this one's not getting me. So let's go after. So I'm going to look at CLT. Okay, so here are these bonds are mostly long term, and then the Federal Reserve says, "Hey, you know what? We're going to raise interest rates big time," and it went down 32% because when investors bought into this ETF, interest rates were super low, and they were locking in. Okay, the interest that's going to be paid on these bonds is maybe 4-6%, somewhere around there. So the actual value of the bond goes up, so that you end up with a yield that matches market conditions, which is the interest rate in the market. But when the Fed begins to raise the market, the rate that interest rates will be at, it actually causes the bonds to lose value because they have to be priced down to match the interest rate that the government will pay somebody that buys a treasury bond or a treasury bill. Now, what happens is, now the flip side of that, when you have interest rates begin to drop, which have been happening, interest rates are dropping, you have bonds rate go up in value, like here. So what you want to do, what I try to do, is I try to buy at certain points where, especially on the long term, you're seeing these valleys. And that way you can try to time it better. So hopefully that made sense. But bonds, it's kind of we're in a weird place with interest rates. Wish I had a really nice chart for bonds, but I don't. This is the best I can do. And CNBC puts a lot of advertising, which I hate, but oh well. So you see how we have in the 5-year, this is where the Federal Reserve increased rates, just went on a tear, kind of broke a lot of things. And then it's kind of been up here in this plateau, but it's expected that these rates are going to drop. If we go into a recession, interest rates drop because the Fed's going to start lowering interest rates and saying, we got to stimulate the economy. And investors are afraid. They're like, I don't want to put my money in stocks. I want to put them in bonds. So that demand on bonds will create higher prices and lower yields on the bonds. So as we see this drop in bonds, that's created that increase that I showed in that long-term bond ETF. I think that interest rates are going to continue to drop, and I don't know if they're going to drop 100 basis points, going from like 4.32 to like probably 3%. That's probably going to happen over the next year to 2 years. So now this all is for older investors, Tomas. I don't want you putting most of your money in bonds. I want you to put them in like the next awesome company in Argentina that's going to double your money in a year. Did you have a question, Tomas?
Yeah, well, I'm not going to invest in bonds, but I have 2 questions. One could be stock analysis, because you talk about mining companies, and I want to know if you consider Vale, the Brazilian mining company. They also mine copper.
And are you interested in that company?
In Argentinian analysts are saying since 1 month ago that it's very undervalued. And if you like mining, the mining sector, it could be an opportunity.
What's the symbol? Do you know it?
VALE.
I am familiar with them. I've heard of them. See how the stock really worked here? There was scarcity of materials coming out of COVID, and then it's dropped. So again, I like this setup. It's like, man, okay, that looks good. $42 billion market cap. Look at this PE. Are you kidding me? 5.26. Crazy. High dividend. All right. So this is setting up really nice. Okay. All right. So here, this is in Brazilian currency. Okay. And you have growth. And then we have a contraction, but this is kind of flat. When we look at quarterly, the last quarter was negative contraction, but you've had a mix of a little bit of growth here. So the one thing I want to know is, what commodities do they produce? So they do iron ore, iron pellets, nickel, copper in Brazil. Okay, that's good. Okay, good.
And I believe they sell the majority of the production to China.
No big surprise. And the thing about commodities that's good, I know Brazil has a currency deflationary, or their currency is very unstable. But when you deal in commodities, it's like these companies kind of don't care. They're like, no, we sell it and we peg it on another currency. So we make, like, the Chinese will pay us a certain amount. Maybe we pegged it on the Chinese currency or US dollars or whatever. So that's a good thing. All right, look at these cash flow. So this is in BRL. So I'm going to cheat and go over to stock analysis. It'll convert it for me. And free cash flow of 2.63 billion, okay, per year in the last year. So 2.63. So when I look at, so they're not growing. They had a nice growth spurt here. Interesting. Okay.
It seems that they had a problem with an accident in one of the mines, and they are paying a lot of money because of that. But from what I heard, it's going to be settled soon.
Victor, if you would like, if it would make it easier, so through Interactive Brokers, I have access to all their data in USD. They already convert the entire financial sheet to USD.
So So let me ask this question. So this looks really interesting to me, and I'd like to do a full deep analysis. Is that something you guys want to do? If you guys want to move on to something else, that's good. But
Oh, I don't mind.
you good with that, Tomas?
Yes, I'm good. I had another question too, not
Uh-huh.
related to mining, but we can do it later.
Okay. So this is what's interesting to me, right? Is you see the free cash flow, you see how it was at these levels, it really had a peak in 2021 when you had high commodity prices. Then it's come down. So we're seeing kind of a low free cash flow number in the current year. But if I'm observing that commodity prices are on their way up, copper prices are on the way up, I think they're going to return back to something that's closer to their mean. You've heard that, statement, revert back to the mean of free cash flow. So what I'm going to do is I'm going to take all these cash flows and I'm going to average them and then use that in my analysis. So let's get into it. Let's kind of deep dive on this one. It's a good one. I'm glad you brought it up. All right. So okay, so this is outside my home countries. I'm going to go with a higher, discount rate. I'll play with the growth rates a little bit later. Okay, so this is where I'm going to take, how many years of data do I have here? I have, so free cash flow. So I have 8 years of data. Very good. Okay, so first, so what's my exchange rate? So 0.174. Okay. All right, so I'm going to get the free cash flow data loaded in here and then we'll continue to talk about it. Okay, so that's going to be divided by 8 and then times 0.174. Sequence. So why is it going to 0? So typing error. Okay, so I'm expecting near-term growth is going to be there in the commodity, so I'm going to leave that there. It brings up the intrinsic value to 97,000. Let's look at cash on the balance sheet and so forth. See how that changes. See if they have a bunch of debt or not. So they have In dollars, they have 5 billion. And then we've got 17,740,000,000 of debt. Their market cap, so stock analysis is saying the market cap is 41.97. This is showing me a different market cap, which I'm not agreeing with, obviously, because it's a foreign stock. Google Finance is having trouble finding the right stock value, so I'm just going to enter it. All right, and then shares outstanding 4. So I'm getting 2 different numbers. So this is what stock analysis has a different number. I'm going to have to verify that. So for now, we're going to go with what stock analysis has, and then I'll verify it after.
Victor, so just another data point. So through my broker, it says, and I'm looking at the stock on the U.S. exchange, 42.66 billion market cap.
So that's close to 42.70. So we'll go with that number that stock analysis has. So the stock price is $9.81. So this is highly discounted based on cash. And again, the setup of the stock looks interesting, right? Like you see how this thing's really been sold off over the last 4 years. It was trading at $20 a share. If it can go back to making that cash flow, boom, the stock doubles. So it looks really good.
I have a quick question. It's just stock analysis and the procedure. So they calculate free cash flow for you, right? Like you can just grab it from their page. But how do they do that? Do you know if it's just the normal calculation, operating income minus capex?
Yes.
Is it double checked? Okay.
Yeah, it's good to double check it because sometimes they make a mistake. But since we're kind of doing things quickly, and then I'm going to go back and verify each number before I put money into it. But for the example we're going through here is I'll just kind of take the calculations they've already created. All right, so earnings per share. So 9 analysts are covering this company. One analyst thinks this is an $18.50 stock, so it's almost a doubling of the stock price. It looks good. Their earnings per share is going to be $1.84. And the growth rate is going to be, so there's been a big contraction in EPS. That's strange. Huh. $1.84. International, I can lower that. Okay. So just the numbers look really, really good for Vale. And I did hear about the story they had, which was that I think there was an accident, some people died, and there's some financial settlements that are going to have to happen. So I do know about that story. Okay, this one looks good. I've got to go back and verify everything. Like I'm actually going to go to the Valley investor page and just kind of make sure that the numbers I'm using are correct. But if I'm generally right, there's a lot of potential here. I really like what I'm seeing here. What do you think, Tomas?
Okay, I thought you might like it.
Yeah, this one looks great. Looks better than BHP. Very good.
Brazil is generally undervalued, many companies.
Yeah, and you know, one thing that I don't know how long it's going to last, but like the U.S. is really expensive, and now that kind of like some of these stories like AI and data center, and hey, it's okay to pay a PE of 100 for a company because they're going to grow so fast. Those days are behind us, and now that whole investing situation is going to collapse, and people are going to be like, okay, well, the rest of the world looks pretty good. The rest of the world is producing, in this case here, materials to get put in the open market, and the material prices are going up. So I like it. All right, so let me update my watch list, and then we'll carry on.
For what it's worth, I double checked. I got the same shares outstanding as you did. And another perk of investing in Brazil, I think that there's no dividend withholding tax for foreign investors. I could be wrong about that.
Good.
At least for now.
Yes, that's true.
Yeah, I believe so. You will get the full dividend.
Very good.
That could change, of course.
Okay.
So, Tomas, you're not planning to buy Argentine bonds, Argentine government debt?
Bonds I already have. I bought, I think 2 years ago when they were 80% undervalued, and now they are almost 100%.
Nice job.
Oh, really? Argentine?
Yeah.
Argentine bonds.
Yes, but now they are fairly priced. But when I bought them, I bought them knowing virtually nothing. Some friends told me, and it was for now. I think it is the most lucrative investment I have.
Wow, good for you.
Interesting.
Excellent. Okay, good stuff. That was a good one. So thanks for bringing it up. And again, I'll verify the numbers, and I might even do a video on Vale because I'm doing videos on material stocks.
So I have one more question. The stock market going down is something that already happened before, but to what time in history do you think is this moment more similar to? And what would you advise me to do if I'm investing for the long term?
Yeah, I think it resembles 2022. And I think we're like here in 2022, like right here. Okay, this is, and the stock market kept selling off. Now, it kept selling off because the Federal Reserve was like just going after interest rates. Like, hey, we have to raise interest rates because we have to, we can't let inflation get out of control. And eventually they got it somewhat under control, and then we moved on. So it reminds me of 2022. So that's why I'm thinking it could really sell off. Now, if you're investing for the long term, right, the good news is that some companies that were just crazy valuations, right? So let's talk about what's a good stock is a good example. So AppLovin, right? AppLovin's a good example. And I sold my AppLovin stock on Friday. I owned it for a week and I made like 16, 17%. So this is crazy. Okay, this is a good company. It's a good business. AppLovin. Market cap is 98 billion. But not too long ago, they were like a $20, a 60, what was the stock price? $68 stock price, and now they're $326 after how many months? So we got 7 months. Just crazy, nuts. Now, AppLovin's a good business. Would I buy it for $100 a share? Absolutely. Sign me up. Would I buy it for $200 a share? Probably, but I wouldn't buy it right now. It's just there's too much like euphoria and things baked into it. But prices are falling fast. Now, what happens in a down market? So I'm still thinking long-term investor, right? So what happens as the market is selling off, it doesn't like stop. It like the momentum carries it forward and then it drops like 34%. So stocks like AppLovin is a good stock. So as a long-term investor for growth is look at stocks that companies you really want to own, but don't buy them. Just start watching them and wait for them to really get sold off, because similar situations are going to happen as the situation with Meta or Netflix. Let's look at Meta, since that was just a beautiful thing that happened. So in 2022, a lot of stocks, including Meta, Netflix, everybody was sold off. And Meta sold off. This was a great business. Everybody knew that. but it sold off from roughly $300 a share down to like, I think the low point was like $85 a share. It was just insane. The market just sold it off, like just kept selling Meta. And if you would have bought around this time, you would have made 569% rate of return. Okay. This is what you got to be prepared for. So look at the companies. You might have a list of 10, 20, whatever number of companies you really want to own. They're just priced a little too expensively. Like Meta, could I see Meta stock drop another 20, 25%? Yes. I already think Meta is discounted, but the market can get nuts and discount it because it does that to these awesome companies. Netflix.
Yeah, it's done it before. Sorry to interrupt. I'm saying for Meta, it's absolutely done it before.
Look what it did to Netflix. Very quickly discounted it by 74%. Well, I bought Netflix. I'm like, are you kidding me? I'll take it. And then very quickly, boom, the stock just took off, right? So look at the companies you really want to own and know that, hey, like going to the car dealership and you go, I really like the Porsche 911, the Carrera, but they're selling them for $200,000 each in dollars. Now, in 2022, the market discounted it down to $85,000, and you bought the same car, but it went from 200,000 to 85,000. You're like, okay, I'm going to wait, and if it gets below 100,000, then I'm going to buy a Porsche Carrera because I love the Porsche Carrera and I think it's a great car. Well, I love Netflix and I love Meta, and I'm going to wait for the market to drop to a buying level that's obviously a great investment. So start thinking along these lines that, hey, if the market continues to sell off just violently, like AppLovin's a good example, right? Like this thing took off. It's kind of resembling this chart here where Netflix, you see how Netflix was on a really nice path upward. And then the market said, we're selling growth stocks, selling them at a really good discount. And wham, we started seeing these charts. It took some internal fortitude. It took some risk taking, but man, it really paid off. It really paid. Netflix paid off. I made good money on Netflix, and then I bought it from my son's portfolio, and I kept it in my son's portfolio. And this is his top performer right now. So, did that make sense, Tomas?
Yes, of course. Maybe I can do DCA while they are falling, or do you suggest to keep waiting?
Like
I know it's hard.
AppLovin,
You cannot predict it, you know. But
yeah, let's see. Like if you see a chart like this, okay, I have to wait on AppLovin. I'm waiting, so I'm going to answer. I'm going to pretend I'm managing my son's portfolio, and I would wait because the news is so bad right now, and it just keeps coming in, like more bad news. Like there's a super investor that runs a Double Line. Have you guys ever heard of Double Line? It's
yeah.
a gun lock. He's like really, really famous. And, let me try to look up a picture of his. So it's this guy. Okay. He knows what he's talking about. This guy's good. And this is something he released recently. Okay. And I would encourage you to watch this because he puts a lot of economic data, on the table. And if you see that, you're like, man, we got a lot of problems. Like there's a lot of things to be worried about. And having said that, I think that is what's going to drive the market. And we may see another year like 2022. Now it's going to get ugly, man. If it gets this ugly, by the time we get to like this point, we're going to be like, I don't want to talk to anybody. I'm just so disappointed. I'm so mad. It's like, I bought stocks and they're down 20%, 30%, 40%. And it just gets really demoralizing, right? But know that, hey, man, these businesses are like Netflix isn't going anywhere. Then AppLovin isn't going anywhere. They're going to continue to grow. They're going to continue to be more important. So start making that list of like, I have these 20 stocks, and to use an analogy, I want to buy a Porsche Carrera. I don't even know what Ferrari models there are out there, but a Ferrari XYZ model. And the Ferrari, they sell it for $350,000, but that was the price in 2024. In 2022, they were selling them for $100,000. So if I can buy a Ferrari for $100,000, I'm going to buy it because it's so discounted. And then a Lamborghini, right? They sell them for $400,000 in 2024. But back in 2022, those things were selling for $150,000. So if something like that looks so darn discounted, DCA buying into a stock in the right zone. And I'll continue to share what I'm seeing, kind of like looking at these graphs. I mean, we're just getting the party started, right? Come on. We're just down a little bit. This is kind of like, this is the one thing I would say is the drop that we've seen in the last 30 days is pretty fast. Like, whoa, man. Like this past week, was it Wednesday when the market just sold off? It was pretty violent. So we might get to that negative 20 pretty fast. And once we get to negative 20, I'm going to be a consistent buyer. Right now, I'm kind of like careful. I'm only buying certain stocks. Like I think Uber's a fantastic discount. I'm trying to move into some things like this where it's like, hey, this makes a lot of sense. This is setting up really well.